Good day to all. We all know how Indian economy is thriving to new heights. Quarter by quarter, month by month, year by year, all the earnings is going up. So it's a good investment opportunity for everybody who is staying in India or staying abroad. So this episode I am specially preparing for all our NRIs who are not staying here but they want to invest here and they want a handsome return on their investment. Step by step, I will take you through the process which you need to do, and then you can start investing your funds in Indian market. So now if we talk about the investment, the current share market have many options where you can invest your funds. If you want to invest systematically on monthly basis, you want to invest on lump sum basis, so you can do all kind of investment. You can keep eye on your investment, what returns you are getting. So there are multiple ways where you can track all the activity which is happening. So let's start step by step, that what are the necessary things you have to do, and then after you can start your investment. The first thing is you need to choose the mode of investment. Means if I simplify it, like whatever you are investing here in India, you want to take it back to your resident country or you want to keep here in India only, because that you need to define at very initial stage. Accordingly, you will set up your account or you will set up your, it's very important to define, like if you want to repatriate funds from here, then basic repatriate option you need to pick. Under that, you need to open NRE, non-resident external account. And if you want to keep that fund in India only and then again reinvest and grow and then after keep it here, then pick the option of non-repatriable account. So under that, you will open a NRO account, which is called non-resident ordinary account. And here, to make it more simple, if suppose you are holding any saving account in past, okay, currently you are not operating it for maybe 1 year, 2 years, 6 months, 3 years, doesn't matter. If you want, you can change your saving account to your NRO account, means non-resident ordinary account. And the basic difference between NRE and NRO account, like all your foreign currency inwards transaction will happen in NRE account, which is non-resident external account, and all the funds which you will generate and do the transaction within India, means in Indian rupees, that will stay in your non-resident ordinary account. So that's the basic you need to understand, and accordingly you need to select. The second step is open of bank account. First step I explained you, there are two kinds of account which you can open. Now the second step is NRE and NRO bank account. Through these routes you can bring in your money. So for in NRE account, all the foreign currency will come and all the money you are generating in India, that will come through NRO account. After your NRE and NRO account is set up, then you need to open a demat account, demat and trading account, through which you will buy all the script. In other words, you can buy all your shares, you can buy all the other instruments, like you can take mutual fund, you can take ETF, you can take bonds, like all these kind of products you have for investment, you can do through your demat account and trading account. Now how you can open this demat and trading account? Any SEBI registered broker, there are multiple, so you can open with anyone, but because you are starting, so it's always advisable to you that you open with a broker like Motilal Oswal. Why Motilal Oswal? Because they will provide you free advisory, they will guide you, they will give you support, and they will do hand holding for you. So once you don't know much about these platforms, how to use, how to pick your shares, what are the fundamentals of this script, then it's very important that some experienced person can stay in touch with you and he can guide you. That will make your life easy. Now one another important thing is PAN card. To open a demat account, PAN card is mandatory. If you are holding a PAN card, it's fine, no problem. Otherwise, first thing you need to apply for a PAN card. It's very simple. You can go online and apply. It takes week or 10 days and you will get a e-PAN card with the PAN card number, and from that you can open your demat account. Now your demat and trading account is ready. Once your demat and trading account is operational, then the third step is to understand what are the products available to you where you can invest, because there are multiple products. You can invest in equity shares, where you can buy direct shares of all the companies which are listed on BSE and NSE. Through your demat account, it's very easy, you can do. The second product you have is mutual fund. In mutual fund, there are equity and there are debt mutual fund. Both kind of mutual funds are there. In that also, you have option to invest lump sum, where you can invest an amount. If suppose you have a certain amount ready to be used, then you can go for a lump sum mutual fund. If suppose you have some income which comes on monthly basis, for example, suppose you are getting rental on every month of fifth, then you can plan your SIP, systematic investment plan, where suppose you are getting money on fifth, then you can put time for 8th, 9th, 10th. So 10th, automatically that money will get deducted from your bank and it will go to your SIP. The next product you can choose is corporate bonds and government security. This is a fixed income option for you. Here you get a fixed rate of interest on your investment. Investment is lump sum, like you can invest 5 lakhs, 10 lakhs, 15 lakhs, 12 lakhs, depend which company is coming with bond and what value they need, what fund they are raising. In that you can buy, and on that you can get a fixed income. You can select your payout method. You need quarterly, you need semi-annually, or you need annually. Accordingly, whatever the interest is on the bond, that will come to you and your capital will stay with the company. Another product is ETF, exchange traded fund. This is also a very good fund where you don't have to get into the hassle of picking the shares or picking the mutual fund. Here what happens, like if suppose you are going for a Nifty 50 ETF, then Nifty 50 top 50 listed shares automatically will get pulled up in this ETF, electronical exchange traded fund. Whenever, if suppose SEBI are delisting some of the share from Nifty 50, or they are taking out from this, adding new, so automatically it will get reshuffled. You don't have to do anything. You just have to hold your ETF. Now the next product for you is PMS. That's called Portfolio Management Services. In this, if I give you a little bit glimpse how it gets operated, in PMS, you don't have to do anything. The minimum investment requirement is of 50 lakhs, where a dedicated fund portfolio manager will manage all your funds, and not only your fund, like you, many others have invested their funds. So fund portfolio manager pulls fund from many individuals, and then all together he holds around 10,000 CR or 20,000 CR, and then he handles those funds and help to grow your fund. This option also, if you have 50 lakhs, then you can go for this option also. Now the next option is AIF, alternate investment fund. In that also the limit is of 1 CR, and same facilities you have, where you get a fund portfolio manager and he will manage all your fund. Other than these products, you can also participate in IPO, initial public offer, and FPOs. Whenever a new company is about to list, you can also buy those shares and then you can hold it, or you can try to do in your way. Now after selecting your products, it's also very important to understand your tax liabilities. So our fourth step is the taxation rules which will apply for NRIs. So if we talk about the tax liabilities, it's not different from the normal residents. For non-residents also capital gain tax, and for normal residents as well non-residents, the structure is the same. The capital gain tax, whatever you will invest and the income you will generate on your investment, so the profit part you will have a liability to pay tax to the government. So now what are those percentages? Then if we talk about, there are two kinds of capital gain tax. One is short term and one is long term. Long term means over the period of 1 year. Whenever you will buy some of shares or mutual fund and you will sell within a year, that will comes in short term capital gain. And if you will hold more than 1 year and then you are selling it and you are generating income or profit on your income, that will count in long term capital gain. So basic, if you talk about the percentage you have to pay, it's 12.5% of your capital gain for long term. On the top you will get an exemption of 1.25 lakhs per year. If we talk about the short term capital gain, then it's flat 20%. Whatever profit you will book within the period of 1 year from your investment, you are liable to pay 20% of that income as a tax. There is one more liability called TDS, tax deducted at source, but this will come into picture only when you will get the dividend for your whatever shares you are holding. And when company is paying a dividend, they are supposed to deduct 10% of the amount and then pay you. But there is also a limit. If you are getting 10,000 rupees as a dividend from one company, then the TDS liability is 0. And then if the dividend amount is more than 10,000, then 10% will get deducted by the the company, and the balance will come to your bank account. The bank account which you had opened, and that is linked to Demat account. Now the next and final step is the compliances part. You need to fulfill all the compliances, like you need to do your KYC when you are opening a bank account, you need to do your KYC when you are opening a Demat account. Other than that, also on regular basis, if suppose you are outside and your resident country is changing, so every time you will change your country or you will change your address, you need to update your address proof, your visa. If suppose you are holding a resident visa of that country, or you are holding a work visa, or you are holding a PR, means whatever kind of resident document you are holding, you need to share a copy of that with your bank, with your Demat account partner. So in that way they will update in the system also, because KYC is a mandatory and it's a very important part. If we talk about OCI and PIO, like overseas citizenship of India and person of Indian origin who is settled in abroad, for them also the same rules are applicable, where you have to provide your address proof, your work proof, your passport copy, like basic. These are the basic. PAN card anyway you are providing. So with all these documents, your account will stay live. Otherwise, sometime you will get a notice multiple. If you are not checking your email, or if it's going to the junk, then some problem you can face where your account will get frozen, and then you have to provide all these documents to unfreeze your account and do the activity. FATCA, FATCA, like Foreign Account Tax Compliance Act. This is also a mandatory. Like when you will open a bank account, bank will get your signature on this declaration, which is mandatory for global tax compliance. This is an annual process. Every year bank will send you this FATCA declaration, and then you have to sign, scan and send it back to your bank account, to your bank. All the activity you will do, everything will get monitored by FEMA, Foreign Exchange Management Act, and that will come under that act. So whatever income you are generating, even you are not in India, you are outside abroad, but whatever you are generating, everything should be from the legal source. Nothing should come from some illegal activity, and all those things, those are monitored and tracked by FEMA. If suppose they are getting some kind of doubts, then they will ask you to prove your source of income, and then in normal cases nothing much happens. Once you provide your salary slip, your rental income, means whichever way you are generating your income abroad, you have to provide that, and then your everything will stay green and you can do your activity. Now to summarize or to conclude this, the key points I will repeat again, that the first thing you have to do is open a NRE and NRO account, then you have to open a trading account, then your KYC and FATCA declaration, and then you can start your activity. In between, if you need any kind of support or help, then don't hesitate, and definitely you can check out, you can drop message in the description box, and then I will try to help you out. For more informative videos like this, if you need more details on some particular topic or particular related areas, then definitely you can drop a message and I will try to cover that also. Thank you for now. Stay safe, stay healthy, and see you soon.